So you got your new credit card today. So you go to the mall, buy some clothes, buy some sneakers. You go to the nearest electronics store, bought a new iPhone, a new iPad, bought a new TV. You went on Amazon, bought them AirPods, bought some miscellaneous stuff for the house, some pictures, some frames. You have a hobby. You went to fishing, you bought a new fishing pole, the best of the best. So you swipe and buy what you want. You bought your kids something, your wife something. You're happy. You're buying all the things you like. But the next month, the bill is due. That smile is upside down. The bill is due the next month after that. The month after that. The month after that. It was fun while you were spending, but it's not fun paying. Let's talk about it. Welcome to Level Up Finance, where we talk about money, mindset on the road to get millions. And on this episode, we're just going to simply talk about how to use a credit card. You might be thinking, I know how to use a credit card. I see what I want and I swipe. Or I go online, I put in my card number, I put in my 3-digit code, I put the expiration date in, and I buy what I want. What are you talking about? I'm not dumb. You know how to use a credit card, but you don't really know how to use a credit card. It's a difference. We're going to go over some of the stats right now. U.S. credit card debt totaled $915 billion in 2020. Billion. That's like, I don't know, that's like a couple of hundred stimuluses combined. The average American credit card debt totals $6,270. The average American, $6,270. The average credit card interest rate totals 20.28%. So an example of this 20.28, everybody want a big boy credit card. Everybody want 10,000, 20,000, 30,000, 50,000, 80,000, 100,000. So let's give you a big boy credit card. Boom, you get a $10,000 credit card. Make it a $10,500 credit card. You swipe, buy everything you want. And we're gonna use 24% for the interest rate of a credit card. The way a credit card works is annually, but they break it down daily with your average balances. So if your average balance is $10,000, say you swiped it all up, is it $10,000? The next month your bill is due. The way credit card companies work is they will do the 24% divided by 12, that give you 2%. So it's like they give you 2% per month with the annual interest rate. All right, so you got a $10,000 credit card limit. $10,500 credit card limit, 2% interest, plus they go by your daily balance, and your daily balance says $10,000 because you don't pay it. You just leave it like that. So 2% of $10,000 is $200. So you're gonna pay $200 on a $10,000 card. Boom, that's 1 month. So it goes down to $95. So the next month is $9,500. So, it was only $500. So roughly say it's $180. You have to pay for the bill next month. So you pay the $180, but your interest rate makes the credit card go up to $9,700, not $9,500. So you just basically paying the interest that you just accrued. And then the cycle continues and continues and continues. So how to not get in credit card debt. This is the basics. If you make $30,000 a year and you got a $20,000 credit card, you don't make $50,000 a year. You still make $30,000 a year. So if you make $30,000 a year, you roughly make about $2,500 a month. So with that credit card, you never swipe more than $2,500 a month. You don't live beyond your means. You live in your means. So if you make $2,500 a month, swipe 2 G's a month. And if emergencies might happen, have another credit card for that. That's your emergency credit card, but you should have an emergency fund, money in the bank for that too. But you're gonna have an everyday credit card and you're gonna have an emergency credit card. That's it. You don't need any more. Me, I have a good amount of credit cards because I'm building trade lines. You know, I need as much trade lines on my credit report as possible because I'm trying to level up my credit. And I'm disciplined. I'm not gonna be swiping and swiping. You pay off your credit card every single month. You don't spend beyond how much you make. If you make $2,000 a month, you don't swipe up $4,000 a month, because if you swipe up $4,000 a month and then you do that within a year, you're gonna incur more than $10,000 extra in debt, and you only make $30,000 a year. So how are you gonna pay off that $10,000 credit card now? Now that's credit card debt. Now you're in debt with a credit card. You're only making a minimum payment, but the minimum payment could be $200, $300, $400, $500. And you can have many cards like this. You can have 5 cards that's maxed out. And then you have this big, gigantic bill over your head every single month. And you got to pay it or you're going to destroy your credit. So the best way not to do that is live in your means, not beyond your means. If you make $5,000 a month, don't spend more than $5,000. That's simple. I didn't even know this basics. I didn't know these basics. Now I know the basics, and I would never be in credit card debt ever again. Because I just thought that was an extension of my income, basically. If I have a $10,000 credit card, I make $50,000 a year. Now I make $60,000 a year. In my mind, because it's swipe, 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 I feel rich, but still live in your means. Credit card can be bad if you don't know how to use it, because you're going to get in crazy credit card debt. You're going to have this big bill over your head. It could mess up your credit score. If you got high utilization with your credit cards, your credit score is going to drop like some bricks. It's just going to drop. So you could be at 730, boom, you at 650 now. If you had 90% utilization or even higher. So that's kind of mess up your credit card, your credit score. And now if you want to go get a mortgage, or you want a personal loan, or you want to get in some good debt to make some money, now you're out of luck, because a banker going to look at your credit score and credit report and be like, well, your utilization is high. It looks like now you got all these credit card bills and totaling about $800 a month, and you make $2,000 a month. And so your surplus of cash is $1,200, but you got rent and you got this and that. So yeah, we don't want to loan to you. You're too risky. So you just destroyed your opportunity there because you're in credit card debt. But credit card is not all bad. It's good sides to it too, and there's a lot of benefits. That's why, Dave Ramsey, I don't listen to that guy, because the guy say you don't have any credit cards at all. But if you use a debit card for purchases, and something fraudulent happens, if somebody you found your number and used it, it would take forever for you to get your money back from the bank. Or probably they wouldn't even want to give it to you back, because it's not really truly insured like a credit card is. A credit card is 100% insured, and you're good to go. I'd rather lose the credit card money than my money. I'm saying? The credit card company money to my money. So the credit card company is going to fight hard to get their money back. So they're going to look at these fraudulent charges. You look at freaking surveillance footage of who was in that Walmart making these fraudulent charges, and get their money back, which in return giving your money back. When it's your money getting taken out of the bank is probably dragging their feet on that. So why are you going to waste your time using a debit card? Use only credit cards. And if you could get a credit card with some points or cash back, get it. Because last December for Christmas, I sent a lot of gift cards out because I had a lot of points. So I got a Nike gift card, I got a Best Buy gift card, and I just text the info to the people I was giving the gift cards to, and that was it. And they was able to use it, go online, buy what they want to buy, and I didn't spend no money. Basically, I accrued the points during the year, so I was good to go. And that's one benefit of a credit card. You're insured, and you get to get points and stuff like that, and it's convenient. and just pay off your credit card every single month on time, all the time. And trust me, you will be good to go. You will never be in credit card debt if you follow these steps. So this is how to use a credit card 101. You get a credit card, you make $2,000 a month. If you could just spend $1,000 a month, pay it off. If you charge up $2,000 a month, pay it off. Whatever your income is, just base your spend on that. Don't spend more than what you earn. Don't be like, okay, I got a $20,000 credit card, so now I could buy some Yeezys or whatever, or some great coupon or some caviar and steak and lobster. Let me buy this every day because I got a $10,000 credit card. That's not how it goes. Then you're going to be in credit card debt. Then you're going to feel down and out. You're going to be depressed. Your financial problems going to get bigger and bigger and bigger because you got this big, gigantic bill over your head. And then probably the only way you feel like you get rid of it if you file for bankruptcy. And if you file for bankruptcy, that's going to be on your credit report for 10 years. And this is going to stop a lot of opportunities for you. So the best thing you could do is not get in credit card debt. Live in your means, not beyond your means. All right. So this is how to use a credit card 101. I promise you, if you use it, you will never be in credit card debt. All right. So if you like this one, give me one of these and I'll talk to you on the next one. All right. Level Up Finance.